Car loans is a scam. Let me break this down and why I'm saying that car loans is a scam. Listen, I got a car loan and I've been through it with a car loan. So I don't want the same thing that I've been going through to happen to you. Me personally, I've been through the struggle and I'm still going through the struggle with a car loan. And let me break it down on why I'm struggling with the car loan. So you could understand, and my 2K trader community can understand on why sometimes it's better to stay away from the car loan as much as possible. Let me break this down to you. First thing is that you have to understand what is simple interest. They like to promote, come to our dealership. Bad credit, all credits is accepted. You heard that before, right? 480 credit score, no problem. Bankruptcy, no problem. Repossession on your credit history, no problem. They're willing to let you come in. That's what the banks want them to do, because the banks are going to get you in the end. If you're rebuilding your credit, if you got bad credit, most likely you're going to have a high APR. Me personally, I had an APR of 15%. And let me break this down to you to let you know how real it gets in the field. This is how it works. This is the stuff that they don't want you to know about. And if you're not smart and if you're not knowledgeable to ask these kind of questions, then you're going to have a couple of years of being broke and not having money. All right, let me explain simple interest to you. This is how it works. Say, for instance, you go to a car dealership and you need a car and they're ready to approve you, or they gave you a pre-approval for an auto loan, whether it be whatever bank. You know all the different banks. They got Westlake Financial, they got Bridgecrest, they got Capital One, they got so many different banks. There's a lot of different banks, right? All right. So, say for instance you go for a car and the car is $25,000, right? They're like, oh yeah, you don't have to put too much money down. It's all good. Or say, for instance, you do got to put some money down, maybe like $2,000, maybe to take care of the taxes so they could quickly get you to sign that paperwork and give you the car. All right, $25,000. They're giving you a term loan for maybe 84 months. They're giving you like 7 years. They're like, oh, you know what? Your payment's only going to be like $600 a month. Oh, okay. You're saying to yourself, oh, yeah, that probably fits my budget. Okay. So this is what happens, though. Just remember simple interest. Now, the way simple interest works is like this. You got a $25,000 car. You got a car payment for $600. But the simple interest is charging you about $11 a day of interest in a 30-day period. So what does that mean? Do the math. That's $330 that's going straight to interest every month. And you're paying $600 a month. That means you $270 of that $600 is just going to the principal, and the rest is going to the bank. So that means the bank is getting rich off of you unless you're able to make double payments, or you can make at least the $600 payment and the $330 for the interest. So that means that the $600 is really going to the principal. That's why they talk about the double payments, because now you're going to end up paying like $930 every month. Can you afford that? Maybe not. Because if you only could afford the $600, that means that they're going to be taking interest, most of that money going to the interest. So if you can afford $600 a month, you got to look for a car note that's probably like $300 a month. You need to lower your standards down. You need to lower the amount you're willing to spend on a car because you could only afford $600 a month, or you could afford $400. If you could only afford $400 a month, you need to get a car note that's like $200. Or you could just avoid the car loans altogether and go buy a used car cash if you could save the money. That would be even better. So you could stay away from making these banks get richer. That's what is holding down our communities and people that's unaware of what these banks is doing with this financing and these car dealerships is doing with these financings. So be very careful before you think that you want to get an auto loan and think that, oh yeah, everything's all good. No, you're going to be staying broke because of all this interest, and you're going to be paying. Look, I've been there. I've done it. I'll be paying, and I pay the car note, and it seems like the money never goes down. I'm like, yeah, what the heck? I'm like, so just be careful. Now, if you have to go finance a car, and if you really like a car and you like, man, I really like this car, and you really want to get into the car, and then you're willing to try to finance it, because, you know, the first thing they'll say is like, oh yeah, you could refinance later on, like 6 months down the line. Yeah, but you know, the percentage might go down a little bit, but still, whichever other bank that's going to refinance that loan is still going to eat. So the best thing that I would recommend if you do want to go that route is that you need to find a side hustle with that car to do so you could pay the interest or make the double payment, make the money, whether it be, you know, you do like some Uber Eats, ride share, whatever you could do with the car, deliveries on the side, you know, whatever that you could find to do with that car to make some extra money. Or if you could, you know, use the car to get to a second job that will open up a door for you to get to a second job, then do so. But just try to stay away and be careful with these people with these auto loans and trying to grab people saying that, you know, you'll get approved and all that stuff. Yeah, you get approved, but you're going to be in a massive debt and you're going to have massive interest and you're going to get these banks richer. That's why, let me say this also. This is why I love my Jamaican people, because you see my Jamaican people, shout outs to them. They never go that credit route as far as auto loans and stuff. They rather save their money. There's this thing called Padna, where they throw money every week. And some people know it as Susu in the community. They throw money every week and they save their money so they could make major purchases. That's how we need to do it instead. Because all we doing, even if you're making the interest payments, yes, over time, the principal will go down and you'll be paying less interest. But still, the banks is getting the money. They're getting richer off of us. So we need to try to keep that money in the community. So if you got to sit down and save for a little while and get that used car, that's the better route. But, you know, sometimes we want to live our lives and be a little flashy and stuff. But know this, that flashiness is going to cost you. And the cost is hidden in simple interest. Next time you go to the car dealership, make sure you ask them, listen, this auto loan, how much interest daily am I going to be paying? How much money extra am I going to be paying for the interest every day? And trust me, when you hear those numbers, you might walk out that dealership and run for the hills. Or you might downgrade your expectation on what kind of car you want to get. Because if you got a certain budget, you got to understand that if you can't make double payments, you have to bring down your standards and get a car that's less money so it could fit into your budget, so you could be able to make those double payments, because that simple interest is going to be the one that you got to watch out for. And this is what I wanted to share with my community. I hope you guys and gals and my audience like this video. Please like and subscribe, share with others. Kindly appreciate it. It's going to definitely help the algorithm. And that's it from the 2K Trader community. Check out my next videos. We're going to be talking about the stocks. Peace and love and happiness.